In this video, I'm going to go over 10 simple hacks that if you do these 10 things, I guarantee you are going to become wealthier sooner than you expect. But make sure you watch this video until the end because I'm going to give you a bonus tip at the end. Hack number one is you have to make sure that you have at least 3 different bank accounts. And the way that this looks now is you want to have one bank account for your spending money, one bank account for your investment money, and one bank account for your savings money. Now, as you start to make more money, as you start to invest your money in different places, you're probably going to have even more bank accounts than this, because the way that it looks like for me is I have a spending account. This is my checkings account right here, that when I make money, it gets deposited right here. Then I have multiple different investment bank accounts. So I have one bank account that holds money that I want to put into the stock market. I have one bank account that holds money that I want to put into the real estate market. And then I have a separate account that's automatically being invested for me. So I have multiple of these investment accounts. So I get paid and some money is going into my real estate, my stock market, and then my passive investment account. And then I also have a separate savings account. This is a savings account that I use. That's my emergency fund. This is there to protect me against emergencies in case things go wrong. Now you're going to probably say, but Jaspreet, I don't have a lot of money to do this. What do you want me to do? Create 3 different bank accounts and put $2 in each? Listen, you have to start getting situated with your finances, and that means you have to be disciplined with how you use your money, because if you spend all your money, you're never going to be able to become wealthy. But at the very least, the reason why you need 3 bank accounts is because you need some money that you can go and spend, that you can buy your groceries with, that you pay your rent with, that you pay your mortgage with, that you buy a car with. This is your spending money. Then this is the money that's going to be invested. And you don't have to worry about getting all fancy with stocks and real estate and all the other stuff right now. Just know that this is the money that's going to be invested. This is the money that you're going to use for your savings to protect you against an emergency. This is not savings that you're going to use as a down payment on a home or a car. This is savings there to protect you against an emergency. Start with this. And a simple way that you can go by doing this is following something like a 75, 15, 10 plan that says for every dollar that you earn from here on out, 75 cents is the maximum that you can spend. 15 cents is the minimum you're investing. 10 cents is the minimum that you're saving. So if you make $100, $75 goes in here, $15 goes in here, $10 goes in here. Keep it simple to start. Then as you start building some money in here, this is where you can decide how you want to invest your money. But before we jump ahead of ourselves, let me go into number 2. The second hack if you want to become wealthy is avoid the shiny stuff. The BMWs, the Rolexes, and the timeshares. If you want to become wealthy, avoid these 3 things until you've actually achieved some wealth. I can't tell you how many times I've seen people making a lot of money just blow their money away because they need the nice car, they need the nice watch, and they need those fancy vacations before they've actually built any wealth. Because let me help you understand this real quick. If you want to become wealthy, the way you become wealthy is not by making few $100,000 a year. If you want to become wealthy, it's not by getting a promotion. The way you become wealthy is by owning investments, period. And the reason why this is so difficult is because when people start making money, what do? I got to show off the money that I'm making. I'm working so hard on my job, I got to show it off. I deserve a vacation, I deserve a watch, I deserve a nice car, because you're working so hard. But here's what wealthy people do. They work hard to earn the money. You get the money. That's the hard part. But then the even harder part is they take this money and they don't spend it. They take this money and they buy investments instead of the BMW, instead of the Rolex, instead of the timeshares. Let me tell you something about timeshares. As an attorney who's not your attorney, I have seen so many people buy these timeshares thinking that they're going to be great investments. You're going to be able to take your family on these vacations. You're spending all your money on these timeshares. You have to pay all this money every year to keep up with it, and then you can't even sell it because nobody wants your piece of crap timeshare. But this is where what I want you to understand is if you want to become wealthy, you got to avoid the shiny stuff for a little while, that we have our money to actually go out and invest. And if I'm being completely honest with you, one of the reasons why I have been driving a beat down Toyota Solara, even though I make decent money, is because of that very reason. I don't want to spend that money on my car first. I wanted to secure my family's wealth. I wanted to see more success in my business. I wanted to see more success in myself before I went out and started dumping a lot of money in my car. And you got to figure out what your priorities are. Charlie Munger used to talk about this, that you don't need a Rolex. Now, if you want a Rolex, fine. Just make sure you're building your wealth first. You want to buy a $10,000 watch? Great. But if you don't have $10,000 in your stock market investments, if you don't have a rental property, what are you doing driving around with a $10,000 watch in your hand? Number 3 is do not save all of your money. And for all of you that are watching this video with some sort of Indian descent, this one is going to hurt. Now, I'm telling you this because my family are traditional immigrants from India. And the traditional Indian mindset is save, save, save. The way I like to say it is the Indian people make $1 to spend 20 cents. American people make $1 to spend $2 with the help of credit cards and lines of credit. And so Indian people will make $100,000 a year but live off of $20,000 a year. True story. This is what they do. But if you want to become wealthy, you cannot get there just by saving money. Now, saving your money is better than going into debt and spending all of your money on dumb things. But if you want to become wealthy, and I mean actually wealthy, where you don't have to stress about money, where money's coming into the bank every single month from your investments, that's not going to happen with you just saving your money. Now, saving your money is the first hard part where you're not spending your money. The second hard part is you got to be strategic with this money, because the reality is your savings are being eaten away by inflation. Now, I know what you're going to say. Jaspreet, I have a high interest savings account. My high interest savings account is higher than the reported inflation number. So aren't I beating inflation and becoming wealthier with my savings account? And sure, if you want to trust the reported numbers, you could look at it that way. But the reality is, for the average person, their cost of living has gone up significantly faster than the reported inflation numbers. For example, between 2020 and 2024, the reported inflation numbers say that grocery prices have gone up by around 22%. That means that a $100 cart of groceries in 2020 costs $122 today. Now, I don't know about you, but my groceries cost a whole lot more than 22% more than what they did back in 2020. So, yes, you can kind of mitigate the effects of inflation with a high interest savings account. There's value to have a high interest savings account, but if you really want to become wealthy, you have to be the person that's investing your money, not just saving all of your money. There's a time and place to save money. Like, you want to have some savings to protect you against an emergency. I say have 3 to 12 months put aside for your savings money just to protect you. But once you save your money, the rest of your money's got to be invested or be ready to be invested. You don't have to always have your money invested. You can have money put aside ready to be invested. But the money is there to be invested. It's not there just sitting there to be saved. Which brings me to number 4, which is don't go out and try to find the next Amazon. See, the mistake that so many people make when it comes to now to investing is they say, you know what, I'm going to invest my money in the stock market. I want to find the next Amazon. I want to find the next Nvidia. I want to find the next Tesla. I want to find the next Google. And so now people are trying to find this next hot stock without really understanding how do you research a company, not really understanding how do you value a company, not really understanding how do you listen to an earnings call, not really understanding what is a 10K, what's a 10Q, how do you read a 10K, how do you read an income statement, how do you read a balance sheet, how do you read a cash flow statement. They just throw their money into a random stock. Now, when you do that, you're gambling. Can you win? Sure. Can you lose? Yeah. But if you want to mitigate some of the risk, one of the simplest things that you can do, especially if you're just getting started as an investor, is just use your money to go and buy the stock market. You don't have to go out and find an individual company. You can just put your money into the stock market. Now you lower your risk and you get the gains when the stock market goes up. Now you're going to say, but Jaspreet, how do I do that? There are funds that give you exposure to the stock market. I'll give you an example. I'm not telling you what to invest in, give you an example. VTI. This is an ETF. That means you can buy it and sell it just like any other stock in the stock market. But if you buy 1 share of VTI, you're getting exposure to the total stock market. And so now, what are you doing? You're just investing your money into the stock market. There are other funds like SPY. This is a fund that gives you exposure to the S&P 500. This is a group of the 500 largest companies in the stock market. So now, instead of trying to go out and find the next Amazon or the next Tesla, which can make you very rich, but can also make you very broke if you lose all of your money, if you don't know what you're doing, the alternative is just put your money to the stock market and let the stock market do its thing, but don't get your mind caught up in the emotional roller coaster, because the reality is markets go up and they go down. That's the part of the system. And when markets go down, you don't want to panic and sell. That's when to buy even more. Now, before I move on to number 5, I want to remind you that on May 21st at 8 p.m. Eastern Time, I'm hosting a live, free, and virtual stock market mastery workshop. This is my first time doing a stock market workshop where I'm going to be going over my own stock market investing strategies. I'm going to be going over how I invest my money passively into the stock market, how do I find funds that I want to invest in, and also how do I invest my money actively? How do I find undervalued companies? How do I research companies? How do you actually do the type of fundamental analysis? So this is a completely free workshop. I would love for you to join me. If you'd like to join me, well, I got the link for you down in the description below. Number 5 is do not overpay the IRS. And the thing you have to understand here is one of the largest expenses for most Americans is taxes. And if you're working a job, if you're a W-2 employee, what ends up happening is your taxes are often just pulled out of your paycheck before you even get to see it. Like if you're making $5,000 a month, you probably noticed those $5,000 don't actually hit your bank account because a lot of the money goes to taxes. Well, one of the things that I want you to do, especially as you start to earn more money, especially as you start to invest your money, especially if you're a contractor, especially if you have your own business, especially if you have a unique financial situation, is I want you to make sure that you're maximizing your deductions and that you're not overpaying money to the IRS. Now, there's a lot of different ways to do this, and this is going to depend on where you are financially. But if you own a business or you're a high net worth investor, you have to. There's really no exceptions to this. You have to get yourself an accountant, a tax advisor that's going to help you manage your taxes. A strong and a successful tax advisor isn't just going to file your taxes. I've been there. You want somebody that's going to do your bookkeeping and then do tax strategizing with you. That means they're going to meet you maybe every month or every quarter, and they're going to talk about what is your tax liability, and they're going to talk about what are your options to potentially pay less money in taxes legally, because every year, guess what? The tax code is changing. So you want to make sure you have that. Now, if you don't have a business, if you're not a high net worth investor, are you out of options? No. Now, if you're just a W-2 employee and you have some stock market investments, that doesn't mean that there aren't ways for you to make sure you're not overpaying in taxes. But you don't want to overpay in accounting fees either. Like, you don't want to pay $1,000 a month just to review your taxes. If that's you, what you want to be doing is look for ways now to get your tax bill reviewed. Now, there's a lot of services that do this. I'm not affiliated with any of them. Just go to Google and search tax review services. They might cost you $50, $100, $200, depending on how much money you're making. It might be more valuable for you to go out and check this, but just make sure you're not overpaying in taxes, because the reality is the tax code is 2,000 pages long. It's not worth your time to know that you're maximizing every deduction. And so if you can pay somebody $100, a couple $100, it could save you a lot of money and a lot of headache just to make sure you're not overpaying in taxes. The sixth hack to help you get richer faster is to double your income. Now, I know what you're going to say. Jaspreet, if it was only that easy. Yeah, I understand, but guess what? I can pretty much guarantee that if you were able to stick with it, you could double your income in the next 5 years. Now, how do you do that? That means you got to invest in your own income. And that means if you are working a job, you might have to change careers. You might have to go out and get a certificate. You might have to spend your evenings and weekends learning a new skill. Because guess what? There's a lot of new online programs out there that can help you learn a new skill, that can help you earn more money, that can help you be a more qualified employee and get a better job. Now, is it going to happen overnight? No. But you will have that skill set that can allow you to earn more money. If it's not from your own job, maybe that means from your own business. And guess what? It's the exact same thing. If you're running a business, there are a lot of ways for you to earn more money. And one of the things that can help you get there faster is by investing some money in your own education. Maybe you hire a coach, maybe you hire a consultant, maybe you buy some classes or you read some books on how you can earn some more money. There's a wealth of knowledge online that you can start with for free. But now, if you understand the way that the system works, if you're going to spend 75% of what you make, invest 15 cents and save 10 cents, if you want to invest more money, you got to have more money coming in. And so now the question is, how can you have more money coming in? Well, you're going to have to earn more money. And the reality is there's already a lot of money out there. All you got to do is figure out how you can attract more money for yourself. And this is possible. I don't care what your career is. I don't care what your background is. I don't care what your degree is or if you don't have a degree. I don't care how you look. There's so much information out there. And if you apply yourself in the next 5 years, you can double how much money you're making. And if you double how much money you're making, well, you can at least double how much money you're investing, if not more, if you don't increase your lifestyle as much. And if you want to be wealthier faster, you got to increase how much money you're investing. That way you can get to your wealthy number faster. Number 7 is commit to improving a little bit every day, even when it's uncomfortable. So I have these 2 little nieces that I spend a lot of time with, and they're adorable. But one of the things that I like to do with them is make sure they brush their teeth before they go to sleep. And that can be hard because if you fall asleep when you're watching a movie, the last thing you want to do is wake up and brush your teeth before you go into bed. But I try to make that a habit. Look, if you want to go to sleep, you got to brush your teeth first. It's uncomfortable, but it starts building those good habits even when things are uncomfortable. And it's the exact same thing with your money. If you're not brushing your teeth at nighttime because you don't want to, how are you going to save your money when you don't want to? How are you going to invest your money when you don't want to? And this is where you got to do the things that got to be done even if it's uncomfortable. And little steps forward start to add up. But you got to make sure you're taking these little steps every single day, saving a little bit of money every single day, investing a little bit of money every single day. These little steps add up if you stick with it, even when it's uncomfortable, because then you're going to look back 5 years from now and you're going to be thankful that you took care of your financial health. Not just your mouth and gum health, but also your financial health. And it's the same thing with learning. If you want to be better at what you do, if you want to improve yourself, one of the simplest and most successful ways to do that is by reading books. Now, I get it. Reading is hard. It's tough. I don't really like reading. I listen to Audible now. But if you want to be able to consume more information, just make it a habit that you have to read 10 pages before you sleep, no matter what. Even if you're tired, even if it's a long day, even if you came back from a vacation, you came back from a party really late, you got to read those 10 pages. If you do that, well, that's going to add up day after day after day, week after week after week, month after month after month, year after year after year. But you got to stay committed, because that's going to allow you to make that progress. And it's that discipline of you continuing to do the things you got to do, because it's got to be done. Hack number 8 is get a high interest savings account. This one, I talked about this a little bit earlier, but I want to make sure we're on the same page here, which is if you have cash that's sitting there, like if you have cash that's waiting to be invested, if you have the savings money, use a high interest savings account, because that's going to allow your money to grow faster than if it was not in a high interest savings account. Because you're going to say, but Jaspreet, in the beginning you were saying how high interest savings accounts are not going to help you really beat inflation like that. Sure, but guess what? A 4 or 5% return on your savings is better than a 0% return on your savings. So if you have this cash put aside, look into getting a high interest savings account. Make sure your bank is FDIC insured. Just be a little, let's call it smart here. Do your research to make sure they're a legitimate bank. But if you have this cash sitting aside, put it into a high interest savings account that we can at least earn something on this savings. Number 9 is scale your time. As you start to make some money, now what you want to do is figure out how you can make more money, right? That's the whole game here. If you can make more money, you can invest more money. But there's a limited amount of time that you have. And if you have to do everything yourself, whether it's for your work, for your house, for your life, you're going to be limited on time. And this is where the question is, how can you buy some of your time back so you have the ability to earn more money? Now, here's one way that I've talked to a few people about doing this, especially higher income earners like doctors, which is you're a doctor, you're a physician, you're a surgeon, and you're driving into your clinic 35, 40 minutes away. You're driving 35, 40 minutes in the morning, and then driving 35, 40 minutes in the evening. You're making $400,000, $500,000, $600,000 a year, and you talk about how you don't have time to do the things that you want. You don't have time to talk to your parents. You don't have time to just relax. But what if now you just got an Uber to work in the mornings, and you took an Uber to work at home? Or if you wanted to be even a little bit more cost effective, is you just wanted to get yourself a driver for the morning and the evenings. Now, guess what? It might cost you, I don't know, $100 a day to get a driver, but you effectively just bought yourself more than an hour of your time back, because now you can sit in the back seat, you can read a book, you can call your friends, you can call your family, you can just relax, you can take a nap, you can do whatever you want, because now you paid somebody else to give you some of your time back. Now there's a lot of ways to do this. Again, if you're running your own business, this is when you got to think about hiring people, and that's tough, because that means you got to let go of some of the controls that you have in your business. But if you want to be able to get some of your time back, you have to be able to delegate. Delegating is hard. I know this because, well, I've done that myself. And the first hard part is kind of letting go of the controls and trusting somebody else to do something. And then the second hard part is finding good help, because there are some good workers out there and there are some not so good workers out there. And when you get burned by some, let's call them not so good workers, you don't feel good, and you feel scammed, and you feel violated sometimes, depending on how bad this person is. And you just kind of feel embarrassed. So you don't want to have to do that again. But if you ever want to be able to have that freedom, not just the financial freedom, but the time freedom, you have to be able to delegate, you have to be able to teach, you have to be able to find good team members, you have to be able to find good people to hire, and that's going to allow you to give you some of your freedom back. But you have to be willing to do that, try, make mistakes, and then find the right person. Number 10 is learn to be a winner. And the reason why this is so important, I don't care if you're starting a business, I don't care if you're an investor, I don't care if you're an employee, you have to have a winner's mentality. And the reason why is, well, no business wants to hire an average employee. No business puts it on their application that we want to hire the most average employee for this position. And if your goal is just to kind of cruise and get by, guess who's going to be the person that doesn't get the raise, that doesn't get the promotion, that's going to be the first to let go when things get tough? It's going to be the average person, or the person that's not really putting in the work. Now you're going to say, but Jaspreet, I don't want to have to put in that extra work. Okay, but why are you working at a place that you don't enjoy what you do? Maybe this goes back to finding something, finding a new career, finding a new passion. Because the reason why some people hate the idea of working is because they hate what they do. There are some bad employers out there, okay? I don't disagree with you. But there are also some good employers out there. Make yourself better, more valuable, so you can work at a job where you do something that you enjoy, where you trust the process, and you actually like the company culture, and now you can actually commit to winning, because now if you can commit to winning, guess what? You can make a lot more money. It's the same thing with business. It's the same thing with your investments. If you're coming in with the mindset to be average, how do you think you're going to end up? You have to come in with the mindset of, I'm here to win. And it's very easy to get complacent. It's very easy to say, you know what, I just want to get by. But when your goal is just to get by, you end up getting beat. And this is where you have to come in with the attitude of, I'm here to win. I'm here to do what it takes to win. I'm here to be smart with my money so I can win financially. I don't want to be broke like all of my neighbors. I don't want to be broke like all of my friends. I don't want to end up broke like all of my family was. I want to live a different financial life, but that requires you to think a little bit different and do things a little bit different. Yeah, it's tough, but the toughness actually becomes a whole lot easier, because when you're willing to put in that sacrifice and no one else is willing to do, you end up having a lot more freedom in the future. Yeah, the first few years suck because you got to make that extra sacrifice for the first few years, but then you end up having a lot more freedom than everybody else you know, because you put in that sacrifice to be that winner. And this is where understanding, sometimes if you put in the extra work in the beginning, you can have a lot more freedom in the background. It's kind of like if you wanted to shoot an arrow. If you ever went arrow shooting before, bow and arrow shooting, if you pull your arrow back, it's going to go forward. If you pull it further back, it's going to go even more forward. And it's that sacrifice of, you know what, sometimes you got to take a step back, put in the extra sacrifice and really stretch, and that's what's going to allow you to rocket forward. Now, I told you in the beginning of this video that if you stuck with me until the end, I was going to give you one more hack. And the hack here is, if you really want to become wealthier sooner, what I also want you to remember is what it means to become wealthy. Because wealthy, financially, is having money in the bank, having the assets, having the cash flow. But I also want you to remember to be wealthy in your life. I want you to live a fit life. Not just a financially rich life, a fit life. And that means being physically fit, mentally fit, spiritually fit, and financially fit. And one of the things that I don't want you to do is to completely sacrifice the other parts of your life in order to make money. Now, don't get this confused. You got to get your money, okay? You got to become financially wealthy. And there will be sacrifices you have to make. There will be times where you might have to skip the gym. There will be times where you're going to have to eat something bad. There will be times where you won't be able to hang out with your friends. There will be times where it just sucks because you got to make these sacrifices. That's a part of the process. But when you get past the initial hump of, I got to do whatever I got to do to start breathing and being able to survive financially, once you get past that, I want you to remember that as you start to accumulate this wealth, you have a whole life you need to live. And you got to take care of your physical health, your mental health, and your spiritual health, in addition to your financial health. That way you can live a truly financially free life. Because you can have all the money in the world, but if you have nobody to spend it with, if you have no friends to spend it with, if you are miserable, if you're just unhealthy and sick, what's the point? And this is where now there are ways for you to be smart with how you're living your life younger. That way, as you start to build your wealth, you can enjoy the money and enjoy the life too. Maybe you eat a little bit healthier. Maybe you try to go for a walk in the middle of the day. Maybe you try to make a little bit of time for your friends on the weekends and you stop spending so much time alone watching Netflix. You got to figure out what it is that's right for you. But remember, if you want to live a truly wealthy life, I want you to be financially wealthy. I'm not one of those people that say, oh, wealth is just being happy. No, you got to be financially wealthy too, okay? But if you want to be truly wealthy and you want to live a financially and fully wealthy life, that means you got to be physically fit, mentally fit, spiritually fit, and financially fit. There are two different types of statements that you want to look at: 10Ks and 10Qs. 10Qs are your quarterly financial statements. Your 10Ks are your annual financial statements. What you want to look for are three different things: the balance sheet, the income statement, and the cash flow statement. These are the three main financial statements that every publicly traded company, every stock in the stock market has to publish.